This week ended with a surprising twist for NIO stock. After days of heavy selling pressure and a midweek slump, NIO closed Friday's session up by about 8%, adding 36 cents to finish at $4.81. It was the kind of move that caught many traders off guard, and it raises a big question: what really drives NIO stock these days? Is it fundamentals? Is it Wall Street short sellers? Or is it the retail investors who continue to stand by the company? That tension between retail optimism and Wall Street skepticism has arguably become one of the defining features of this stock. Let's set the stage. Just earlier in the week, NIO was on the ropes, sliding to $4.45 on Thursday after losing nearly 4% in a single session. Before that, the stock had been testing the possibility of reclaiming the $5 handle, but the momentum quickly broke down. For many, it felt like a repeat of the broader story we've seen all year. Every time NIO looks ready to push higher, the sellers come back in force. Then Friday arrives, the mood flips, and suddenly the stock puts in one of its best sessions in weeks. So what's behind these dramatic swings? Part of the answer lies in the way Wall Street and retail investors approach NIO very differently. On Wall Street, the consensus has been skeptical for a long time. Analysts point to NIO's mounting losses, slowing deliveries compared to rivals, and ongoing concerns about competition in China's EV market. Hedge funds and other institutions have also maintained significant short positions in the stock, betting that the long-term trend is down. This helps explain why rallies so often meet a wall of selling pressure. But retail investors tell a very different story. For many of them, NIO represents an opportunity to buy into the future of electric vehicles at what they see as bargain basement prices. They look at the company's technology, particularly its battery swap stations, its smart EV platform, and its growing brand in China, and they see untapped potential. Retail investors often highlight NIO's expansion into Europe and its long-term vision for energy services, not just cars, as reasons to stay the course. That disconnect creates a battleground. Whenever NIO's stock drops sharply, retail voices on forums and social media call it an overreaction or even manipulation by short sellers. And whenever the stock rallies, Wall Street tends to dismiss it as nothing more than a short covering bounce or a temporary relief rally. This tug-of-war is part of why NIO has been so volatile, swinging several percent in a single day even without major company news. Now, let's talk about short interest. NIO remains one of the more heavily shorted Chinese EV names traded in the US. That doesn't always make headlines, but it plays a big role in the day-to-day trading dynamics. When you see a move like Friday's 8% pop, there's a good chance that at least part of it was fueled by shorts covering their positions after an extended run of selling. This is what creates those sudden bursts higher even when the broader sentiment hasn't shifted all that much. At the same time, retail investors often interpret those moves as validation of their long-term thesis. They argue that the shorts are underestimating NIO's ability to adapt and grow. And to be fair, NIO has shown resilience before. The company has navigated multiple slowdowns in China's EV market, introduced new models, and maintained government support as a national champion in the push for electrification. But the road ahead is not without challenges. Deliveries have been a sticking point. Earlier this year, NIO reported numbers that came in below expectations, sparking another round of bearish calls from analysts. On top of that, Tesla and BYD continue to dominate the Chinese EV space with scale advantages that make it difficult for smaller players to keep up. And yet, despite these headwinds, retail interest in NIO has not gone away. If anything, some see these low share prices as a gift, a chance to accumulate while Wall Street stays negative. Another important factor to consider is the broader macro backdrop. This week, US markets have been choppy, with investors digesting inflation data, bond yields, and expectations for Federal Reserve policy. Chinese equities as a whole have also been under pressure due to concerns about the economy's recovery pace. NIO doesn't trade in isolation, it's caught up in these larger currents. When global risk appetite improves, NIO tends to bounce. When markets turn risk off, NIO often gets hit even harder than the average stock. So as we think about where the stock goes next, the key question becomes, who has more influence right now? The institutions betting against NIO, or the retail investors still backing it? The truth is, it's a mix of both. Wall Street skepticism has set the tone, keeping the stock under $5 for much of the summer. But retail resilience has provided a floor, preventing a total collapse even as the company faces steep competition. What we may be seeing is the setup for another test of strength. If shorts continue to cover, and if retail investors keep buying dips, NIO could easily retest the $5 level again in the near term. From a technical perspective, that's the battleground area. Reclaiming and holding $5 would signal a shift in momentum, while failing again could reinforce the bearish case. For long-term investors, the weekend is a good moment to zoom out. NIO is still a company with significant potential. It's building a unique ecosystem around battery swapping, exploring partnerships, and expanding globally. But the path will be bumpy, and the stock will remain volatile as long as Wall Street and retail remain so far apart in their outlooks. In other words, NIO's next move may not be dictated by a single earnings report or a single delivery update. Instead, it may be shaped by this ongoing tug-of-war between short-term skepticism and long-term conviction. For investors watching from the sidelines, that creates both risk and opportunity. For those already holding shares, it's a reminder of why patience and perspective are so important with high-growth, high-volatility stocks like this one. So as we head into next week, keep an eye on how NIO trades around that $5 level, and keep an ear out for any updates on deliveries or partnerships. But also recognize that beyond the headlines, the real story may be about investor psychology, the battle between Wall Street shorts and retail believers. And that, more than anything, could decide whether NIO's Friday rally is the start of something bigger, or just another chapter in the ongoing volatility. For now, NIO ends the week on a positive note, up 8% on Friday and closing at $4.81. It's a reminder that in this stock, fortunes can change quickly. Whether Wall Street or retail investors ultimately prove right about NIO's long-term future, one thing is certain: the fight for control of this stock is far from over.